This is the performance summary for week 17 of 2025, which was the week ending April 25th. Let's start by inputting the starting and ending balances. Starting balance was the one on Friday, April 18th. And the ending balance was on April 25th. So I made a little bit last week. I was up $266, which is a percentage gain of 0.98%. And these were the two trades that we did last week. Last week, we did not have the usual 5 trades. The strategy doesn't always pick up the full 5 opportunities based on the technical indicator scan that it does. So these were the 2 trades that we did. And we'll notice that the fraction is at 10% for each instead of the usual full allocation of 20%. And that's because the strategy has determined that the market is currently in a bear market condition. So it's going at 50% strength, which means a 10% allocation to each position. So the first trade we did was Meta, where the stock was up 11.39% for the week. And this is how the trade looked. So it's a mean reversion dip buying strategy. So it looked at the weakness in the recent past. And so it bought here on a Monday and sold here on a Friday to make 11.39%. The next trade was United Healthcare, where the stock was down 6.9% for the week. And this is how that one looked. So in the prior week, there was a earnings announcement and it gapped down pretty severely. And the stock continued to go downward over the course of the week, never recovered. So we lost 6.9% on that one and a 10% allocation. And let's now input the ending balance into the cumulative tab. And I update the graph here. So what we see in the graph is there's 2 lines. The gray line is the actual account growth since June 2024. And that contains both version 1 and version 2 of the strategy. Whereas the yellow line is the hypothetical growth of the account had I been trading version 2 all the way back to the inception point in June of last year. So the yellow line is mostly hypothetical, but the last bit is actual. We converted from version 1 to version 2 like earlier this month. And now let's look at the longer term equity curve of the strategy. So over the long term, the strategy has an expected annualized return of 19.1%, whereas the S&P has 8.2%. And this is going back to 1994. And year to date, the strategy is up 2.8%, whereas the S&P is down 8.2%. And this is how the long-term back-tested equity curve looks, which is the purple line. And the gray line is the benchmark S&P 500. So that's the performance summary for week 17 of 2025. If you want to learn more about the strategy, please visit my website at returnstream.com. Link is below. Thank you.